Let's go. Oh man. You know what? You know what? I'm actually ready to start. Let's go, guys. Look at Anders at 423. Man, what is going on? How's everybody doing? I already feel rusty, and I only haven't done any live stream since what was it? Wednesday, Thursday, somewhere around there. I haven't done a live stream since then, and I'm already feeling it. So let me know there in the chat who is there in the chat. Gotta say hi there in the chat. And then let me know, guys, what did you guys buy this past week? I already showed you guys on the video earlier today that I posted this morning. Made a couple purchases. And man, you know, I really like my purchases. I really did. I'm hoping I can get to buy some more or a little bit heavier this next week, man. Even though I don't get paid for my second job, but man, I would love to deposit a little bit more this next week. But what's going on? Let's go. And you know, we just gotta start right by who's ready to grow our portfolios one cup of coffee at a time. I definitely need this coffee, man. I was just working on my truck. I just did an oil change and I changed the two front shocks. So I did that real quick today. Only took me a couple hours. Not that bad, but you know, I definitely need the coffee today. So let's go, RM. What's going on, RM? What's up, James? What's up, chat? Let's go. Sundays are not good per Anders. Let's do this. Go big or go home, Shannon. Oh, I like that, man. Love the energy. Let's go, man. Let's go. Earnings week. This is gonna be a big earnings week. I'm gonna take a look at Sunday futures, which I do. I just had to click on Yahoo Finance real quick. But man, I gotta take a look at Sunday future, and this week I'm already looking at the schedule for this week, man. Busy week this week. I need a nap from Anders. Yeah, man, me too. I'm feeling it. I'm kind of tired. Let's go from M. Anders, I took ACSPO today and yesterday, 8 hours each day. Sorry, I'm pretty sure you guys are talking about some programming or some, you know, computer stuff. Oh man. On top of work and the doctoral program, I am dead. Wow. I bet, man. Sometimes you need some rest, man. Some rest it helps out a lot. I watch F1, watch YouTube videos, and gamed, and went for a 3+ mile walk. Let's go, man. Mow the yard takes 107 steps. Wow, you took account on the steps of mowing the yard, man. But you had a busy day, man. Especially that 3+ mile walk, man. That's awesome, man. That is awesome. Good evening from Alex. What's going on, Alex? Let's go, man. What's up, Jay and chat? Let's go. What's going on, Home Advantage? Futures are up. Oh, we gotta take a look at that, Shannon. We definitely gotta take a look. I know there was a halt on attacking or any war with Iran, right? It was paused for now. Between both Iran and Trump, pretty much. So if there is a halt, everything's paused right now. I'm assuming that's why the stock market is up, because I haven't seen any other news other than those. Fast Eddie, what's going on, Fast Eddie, man? Thank you so much, man, for always supporting in the chat, and thank you for the jewels the last time. I didn't know what they were, but man, I really appreciate it, man. I just looked it up. Man, really appreciate it. Isra, hi guys, what's going on, Isra? I'm so sorry if I asked earlier in the week, but any chance you look into McCormick, TSCO, and Rollins, please, Jay? Yeah. Let me see who else is here in the chat, and then we could take a look at those. I don't think I have taken a look at McCormick and a TSCO. I think we looked at Rollins though. I think we did take a look at that one. But McCormick and TSCO, I don't remember looking into those. But yeah, let's put it a little bit down in the chat if you don't mind. Once again, the ticker symbols like that, I can, just research it real quick. Hey, everyone from Madden. Isra, update my SCHD. Oh, let's go start by updating. I remember you hit me up on X. We should start. Hold on. I gotta open. Oh, I don't even have it open. Hold on, give me 1 second. Let me open up the spreadsheet real quick. Where is it? Google Sheets. Google Sheets, let's go, man. I wanted to do so many things this week that I was off, man, and I feel like it just went by like this. Man, a week off vacation that just went by so fast, man. And I was working yesterday and the day before yesterday. But let's go, Isra, and anybody else that wants to update their SCHD count, let me know there in the chat. But Isra hitting 300 shares from 234. What a jump, man. What a jump from 234 to 300 shares. Wow. What was that move that you made, man? Wow, nice. Boosted your income too. Hold on, let me see. The dividend for September, $78. Wow. $78. So far, you have collected $97.30, including September for the year. This is for the year so far. It will be $175, Isra. Man, when you add it up, right, for the whole year, it's great, man. It can definitely add up. And there's decent weekend. Yes, RM. Listen to the earnings calls for TSCO and Rollins. Not sure what to think. Ooh, that's not a good sign. Do you hold Rollins? And that one? Alex bought a couple shares of SCHD. Let's go, man. Alex, you were killing it, man. You went from 9 shares at the beginning of the year to 152 already, and you bought a couple more, man. Let's go. Why were the shocks bad? How old is your truck? So Fast Eddie, I have a 2001 GMC Sierra. That's what I have. So yeah, the front shocks were bad. The front ones, they were bad. So I went ahead and I bought some like $100 something bucks. I bought them. They're not the best one. They're also not the cheapest one. They're like in between. So, for what I need is just to drive back and forth from home. So yeah, I have a 2001 paid off. Imagine owing on a 2001. That would be crazy. No, but I got a 2001 for me. And then for the family, my wife drives a 2016 Pilot. That one, I grabbed it on payments. And it has paid off like very well, man. We have used it for like many trips. They drive everywhere, all the time. The kids' activities, just very comfortable. Also, I know they usually say cars are a liability, but I think that the investment that I made into that truck, with the interest and all that, which I paid it off quicker. Oh yeah, Fast Eddie, I forgot you just joined the community not long ago, but I was sharing when I was making the payments of the Honda Pilot, trying to get rid of it. And what I was doing is I had a $400 car payment, and I was paying like $500 every month, $550, whatever I could, I was doing. And then I paid it off like 2 years sooner, something like that. So it definitely paid off, and it has been very good, man. The truck has been very, very good. Let me see. So Anders, wow, what a shopping list, man. SCHD, SCHY, Vici Properties. I'm assuming you mean Main Street Capital, right? And QTUM. Wow. Nice list, man. RM, I'm buying Microsoft, McDonald's. I like McDonald's at the current levels, honestly. I really do. Not financial advice, but I really like it. Pepsi, Home Depot, Rollins, TSCO, MKC. What is MKC? Intuit, KR, that's Kroger, and Lowe's, VOO, and SHD as well. Wow, nice shopping list, RM. Let's go. Creeping up on 1300 SCHD another week like this. Nice, man. And there's you are at 1254 right now. So, man. Yes, sir. Oh, yeah. This is the one. We're going to take a look at those. Let me just see here. We're going to take a look at those with RM real quick. Oh, Tim is there in the chat. Good evening, everyone. How late am I? Not too late, man. Not too late. Are you still early? JL, what's going on? Hi, Jay and everyone. JL, so you're planning on buying 2 shares of SCHD? I saw it. You and Brainchild. I saw the comment earlier today in the video. That's awesome. For me, it has been working very, very well. Oh yeah, post the first video on my retirement channel, and then I hate watching myself in the video. We're gonna take a look at your video. Can you please remind me later in the chat, like towards the end of the stream? You know, I want to go ahead and watch it with chat real quick. Let me see. SCHD 1272 for Anders. Wow, man, you are killing it, man. That retirement is getting closer and closer. And are you doing, when you do your retirement channel, right? You're doing videos in Cambodia, right? You're going to show us how it is living retired over in Cambodia, you know. You're going to show us all the details, you know, how everything works. I think that's going to be pretty cool. Buy yourself a GoPro or something. Or I think you have one already. So, you know, that would be awesome. My wife's on vacation this week and her birthday is tomorrow. Happy birthday to your wife. Let's go, man. You're doing something nice for her. You know, you got to take her somewhere good to eat, man. That's really, you know, that's one of the best things. I enjoy when my wife is birthday because I take her to a good place where I also enjoy it. Don't say anything. But awesome, Fast Eddie. Happy birthday to your wife, man. Awesome, awesome, awesome. Alex, I'm at 160 shares of SCHD. Let's go. Wow. Wow. And 1066 from M. Let's go, man. 1066. 1066. I'm at 10 shares of SCHD and 12 shares of SoFi. Oh, Tim. Let's go, man. 10 shares. Let's go, man. And Tim just started this position not long ago, man. And 12 was SoFi. I got to talk a little bit more about SoFi, but I think this is going to be probably on Wednesday's live stream when, you know, when we do the earnings call. Let me just go through a few more, and then I'm going to take a look at a couple stocks that RM posted there in the chat. Home Advantage. 500 shares of SCHD, 250 of SCHD, working on building to 500 by October. Wow, solid position, man. Do I have you here on the list? Probably don't have you here. No, I probably don't have you here. Let me add you in here. I forgot to work on this spreadsheet, honestly. I was working on a few other things because I already qualify for getting quickly. Like this time it was quickly that I already qualify for the next YouTube paycheck. You know, I already crossed the $100, so that's gonna be depositing. Now I gotta take a look, but I already qualified. I think it's gonna be next month. Yeah, I think it's gonna be next month that I'm already gonna get paid. So that was a much quicker one. And it was thanks to a lot of you guys. You know, Fast Eddie, Looney, Capital, and I think it was Dividend Mike. I took screenshots of everybody, so I'm gonna be sharing that like the last time, man. You know, your super chats definitely help, man. That is awesome. Wow, 500 SCHD shares. Let me put it right here, Home Advantage, and then I'm gonna work on this Saturday coming up. But wow, solid positions, man. Love it. Seeing you get so happy for everyone that SCHD shares is so awesome, Jay. You're the ultimate hype man. Yeah, man. It's just, you know, I get happy for others, man. Like I don't, you know, that's just how it is, man. You know, I love building these positions, and I like the way SCHD has performed so far, you know, since inception in 2011. And it has been a solid ETF. It's not like the best performer with like the best returns, but I think for the purpose of the ETF, which to me is more the dividend growth, and he has grown the dividend like 300 something percent. Like it's just great, you know what I mean? Like it's just to me, and in my opinion, of course, none of this financial advice. You gotta invest at your own discretion and your own research, but it has been performing very well. And for me, since I've been buying it since 2022, I actually just posted on X a screenshot of and in the bottom, if you guys notice, it has the first time that I bought SCHD, which it was on November 29, 2022. I put like $100 somewhere around there. I think it was like a little bit more than $100. So my cost per share then was like $25. That was the share price after post split. You know, Before split, I think the share price was like around 70 something dollars a share. But man, yeah, man, that's just how it is. We gotta continue growing our assets, man. And like I always say, every little bit counts. Like I know sometimes people troll and everything, and they're like, "Oh, you're only putting this much. You're only putting 20. You're only putting 15." Hey, you know what I mean? Like at first, I used to get trolled a lot when I had the $8,000, $9,000 portfolio, $10,000 portfolio. Like people would be like, "Oh, you're only buying like $10 of this or one cup of coffee of this, which is $5." What is that? But now that the portfolios are 42K, you know what I mean? It's a different story. And then in a couple of years from now, when the portfolio is much higher, it's going to be a little bit of a different story. But man, let's go. I still think I should be allowed to count my SCHY shares. SCHY, is a good one too, man. Let me see. Oops. Main. Yeah, I knew it. Honda is the go-to vehicle for reliability. I'm on my third Honda. Yeah, after this GMC that I have, I am planning on buying another Honda. I'm just going to go with Hondas. I know how to work on them better because before my GMC, I had a Jeep Grand Cherokee, but before that Grand Cherokee, I had two other Hondas. And then my wife had another Honda Civic, and then we have this Honda Pilot. So I have like 4 Hondas so far in the family, and it has been the best car, and I feel much more comfortable working on them, like doing the oil changes, the alternator, the belts, the spark plugs, the brakes, the shocks, like things like that. I'm much more comfortable than used to have a lot of car payments. Now I pay cash. Bought a brand new SUV in December. Nice, fast, steady. With trade and paid cash with the balance. Nice, man. That's awesome, man. I'm hoping I'll get there in the future where I could do that. All right, let me go back real quick because I'm going to forget. We're going to take a look at these. Let me just hop on into Yahoo real quick. I want to see where... Okay, let's take a quick look real quick at futures. So it looks like, wow, S&P futures, like Shannon mentioned before, it is green and going up. It's getting closer and closer to 1%, the S&P in the overnight hours, pretty much. So this is futures right here. Dow Jones also 0.59%. That means SCHD might reach another all-time highs tomorrow if it stays this way, because the SCHD tracks the Dow Jones. So yeah, wow, SCHD hitting all-time highs once again. It's just crazy. Nasdaq up 1.18%, man, at 8 o'clock. Oh, it's already 8 o'clock. So we're gonna take a look at a couple stocks in a few and see where they are at. Yeah, we'll take a look at a few of them. Especially with earnings coming up, man. These earnings right here, I have a feeling that my portfolio is gonna be, and you guys let me know there in the chat, it's gonna be like either very, what's your portfolio gonna be? Because mine, I think, is gonna be either very green by the end of the week, maybe over 43K, which will be at all-time high once again. And I never reached 43K before in my portfolio. I think it's either going to be 43K or it's going to be down to 41K once again, maybe even 40K. I think. All right, let's just take a look at these stocks real quick. Requested by RM real quick. Let me see. MKC. All right, let's take a look at McCormick. McCormick right here. Okay, so McCormick is at $49. Let me see. Dividend yield. Wow, 3.84% dividend yield. I like that. Trailing PE is at 8.3 and forward PE at a 16. So it looks like future guidance is not looking very promising from what I see. Price target $60. So upside of 21% from here. Let me see. The year to date is down 26%. Okay. In the past year is down 31%. In the past 5 years is down 41%. Wow. Let me see the dividend stats real quick. So they have grown their dividend 39 years. Ooh, payout ratio is only 31%. Dividend growth 6.78%. So that's some nice dividend growth for a mature company. This is not a company that just started, now. It's a company from 1889. So it's a very, very mature company. So to have some nice 6% dividend growth, I like it. I like it. Let me see. So yeah, 48 cents. That's how much they paid. Yeah, so they usually increase their dividend, between 5 and 8%, it looks like, in the past couple of years. The dividend yield is the almost near the highest. The highest was 4% not long ago, actually, earlier this year. But right now it's 3.84%. It looks like this might be a good opportunity to build this. What is this? Oh, I like this. I never seen this before. I'm guessing this is new in here. I gotta get used to it. This new look at the operating cash flow. Look at this. Look, CapEx. It even shows CapEx. Look at free cash flow. Oh wow, this is actually pretty cool. Yep, I need the pro. That. All right, for the 10 years. But for the 5 years, we can take a look right here. Look at this. The revenue is growing. It's staying steady, $7.3 billion. Revenue growth, 9.5%. Okay. They're still growing the revenue. Gross profit is 2.87 billion. Operating income, 1.22 billion and growing. The net income, it is at 1.62 billion dollars. Okay. Earnings per share, look at this. $6. Wow, in the trailing 12 months. I wonder where that came from. Where did that come from their earnings? Is this a one-time thing? Why the earnings per share grew? Let me see. Consumer net sales. Yeah, it's steadily growing. Labor solution net sales. Okay, revenue total 7.3 billion. Yep. It looks good. Total debt. It is at 4.93 billion. Okay, that's the current. They were paying it off, the debt. And how much cash flow they had? Hold on. They had the total debt at $1 billion in free cash flow. So they do have some. They have some debt, but they'll have some cash flow. Operating cash flow, 1.23 billion. Okay. CapEx. It even has CapEx here. I like this. All right, let me see the margins. Oh, nice. 21% profit margin. Why did it spike up so fast? Like, I would just take a look at that, RM, if you're looking into adding this company or something. But I'm liking what I'm seeing. I'm liking what I'm seeing. I just see that the growth spiked in the earnings per share a lot. Yeah, and the dividend is very high. So this one might be a good, it looks good. It looks good right now from what I see right here. What do they have as products? Let me check. McCormick. So they have, this is the seasonings, right? This is the hot sauce. They have sauces. They have a few things, seasonings. Yeah, it looks good. It looks good. I don't see over the top. I didn't see anything wrong, RM, or anything like really bad, But what I'm seeing, it looks good. Even the dividend stats looks good. Price target, it looks like forecast. It looks good too as well. 21% upside from here. I would just take a look if you're looking into adding this one. Just take a look at the last earnings report, which it was in June 25. Like, why was the spike so high in the earnings per share? Like, where did that come from? You know what I mean? But other than that, it looks good. Yeah. All right. Let me see. What else was it? TSCO. Let me see. Wow. We took a while in that one. There's a whole bunch of comments. Oh my God. I got to catch up. Uh, I see someone named Calvin. Don't go anywhere. I'll take a look in a little bit. I see RM, Tim, Shannon, M. Let me see Yoshi. Okay. Wow, there's a lot of comments in here. JL also. X is there. Let's go, Barnes. Let me take a look at Tractor Supply real quick. So Tractor Supply, $31. Upside of 16% from here. Price target, 3.09% dividend yield. Share price is down 38%. I think this one we also took a look at Tractor Supply. I think it was mostly the guidance on this one. It's down in the past year 47%. In the past 5 years, it's down 17%. I think in this one, I'm liking this new tab actually from Stack Analysis, man. I will honestly, like, if they ever, threw me like a hey, do you want to partner or something with it? I wouldn't mind with this website. I've been using it since I started investing and I like it. I got used to it. I just gotta look for other websites for the REITs. That's the only thing. But yeah, this one it looks good. I like this sheet right here. All right, so let's take a look at the revenue right here. It's a 15.7 billion and it's growing like a mature company. Yep, 2%, 4%, 3%. Okay, so that's good. Gross profit, 5.74 billion. Operating income went down. I think wasn't this one that same store sales were slowing down? I think it was. I think I have a feeling this is the one that same store sales were slowing down. There wasn't that much traffic, like foot traffic into the stores. So I think the future guidance was a little bit uncertain. Net income is down to one billion, right? Earnings per share, yeah, it went down from $2.06 to $1.92. I think it's mostly the guidance. Total debt, yeah, 6.5 billion. They don't have that much cash, if I'm not mistaken. In free cash flow, they only have 300 something million dollars, and they're acquiring more and more debt. So they're acquiring more and more debt, and they're earning less and less free cash flow, even though they're probably spending it on the debt most likely. The margins, look, they're compressing. Margins are going down 6.4. I would just be careful. I would just look at the future guidance on this one. Is probably this one. You also gotta take a look at this is mostly machines for farming and stuff like that. Payout ratio is 48%, so it still looks good. The payout ratio. Dividend growth 4.4%. So far, I like more McCormick than Tractor Supply. Not saying that Tractor Supply is bad though. Let me take a look at Rollins real quick. Out of the three, I mean, that's just my opinion, not financial advice. Remember that. Rollins, 18% price target from here, $45, 1.89% dividend yield. Share price at $38. Year to date is down 36% almost. Past year is down 30%. Past 5 years is up 1.74%. Okay. PE ratios out of 35 and forward PE out of 31. Let me take a look at the dividend stats real quick. So the payout ratio is 66%, so that looks good. Dividend growth 10.6%, and they have grown their dividend 23 years. That's some good solid stats. Look at this. They grow their dividend double-digit percentage. But with the share price going down, this is the highest the dividend yield has been, which is 1.85%. All right, let's take a look real quick at the financials right here, revenue and profits. So revenue is at 3.92 billion. So they're growing their revenue. Yeah, 10%, 9%, 14%. That's some solid revenue growth. Gross profit also 2.05 billion. Operating income, that's 731 million. Okay. Net income also growing 531 million. Earnings per share, yep, also growing up $1.10. Okay. What is this? Revenue by segment. Oh, I like this. Residential, yep, 1.76 billion. So it's growing. Commercial is also growing. Termite completion. So yeah, that's all growing. Franchise is flat. Others is down. Wonder what that others is. What is that others? Like what kind of you know? But it looks like residential commercial is growing steadily. That's a good sign. I think those are the two major segments from them. $1.1 billion in total debt. So, and free cash flow is $619 million. So they do have free cash flow. Profit margin, 13%. So nice profit margin right there. Pre-tax margin, 17%. Operating margin, 18%. This one looks good too. Yeah, this one looks good too. I'm assuming the the PE ratio has been it's been down a lot, significantly. Of course, we don't just go by this, but this, you could start with this and then work your way. Price to free cash flow 29. Price to sales ratios at 4.73 is the lowest in the past 5 years also. Same thing with the PE and the forward PE. Do you see this as an opportunity? It probably is. I would just take a look at the future guidance. You know what I mean? And if it still looks like it's going to grow steady, then this might be an opportunity. I don't see that you're catching a falling knife. I don't see it. Like just overseeing just the top of it. You know what I mean? You got to do a deeper research, of course, because this is not financial advice, but I just see it, good. I like McCormick, Rollins, and then Tractor, out of the three. All right, let me catch up. Wow, there's a lot. There's a lot of comments here. I'm sorry, guys. I spent a lot of time, but 3 good picks, though, RM. Thank you so much. Bob, VGT, SPMO, VOO, SCHD, Irene, and this week, nice, solid list, man. I've been seeing a lot of posts about IREN. I got to take a look at that. Sweet Green is a Temptress SG stock. I may have to buy if it falls under Sweet Green. Didn't we take a look at this one before? See the financials. It's going down the trailing 12 months. Gross profit is going down. Operating income is still in the negative. Net income just turned positive, 16 million. Earnings per share also just turned positive. Like, do you believe in a long term? Is that what this is? In-store channel. Marketplace channel. Yeah, if you see this is going down, the sales. This is flat or going down slightly. Yeah, revenue is also going down. So, yeah, I would just look into this a little bit deeper, though. Total debt is 356 million. and free cash flow is negative, so their debt is gonna pile up a little bit more and more. Let me see. Profit margin is only 2%. They just turned profitable. I guess this one is, do you believe in the company long term? I think this is gonna be one that you know, my opinion, of course, not financial advice, buy and hold for years, and um hopefully does come on top. Yeah, so it's like a salad place. Okay. All right. Let me take a look at what else? What other comments? Eduardo, dímelo, what's going on? I feel like SCHD is running away from me. But 797 shares, man. And I'm gonna be honest, I see that the Dow Jones was up. Futures, Dow Jones futures. So SCHD might be up again tomorrow. Don't be surprised, man. But also don't rush, guys, into like wow, 797, Eduardo. Did you make any moves though? Wow. Wow. From 500 and something shares to 797 shares. Wow. That's 221 $207 estimated September dividend. Let's go, man. What was the move that you made to pick up so many shares? Yes, 2 shares every Monday, JL. Let's go. Well, for now, it is my journey to retirement, but sure, eventually might post videos from Cambodia or wherever I retire to. That's gonna be very cool, Anders. Those channels actually get nice views, man. If you start posting your things, my retirement from a whatever portfolio, whatever amount portfolio, or retirement with dividends, I think that's gonna be very good. Retiring with SCHD and QQQI. I think that will bring a lot of views, I think. Anders will post videos of me visiting him and doing cool things. Let's go, man. Well, some of the cool things. That would be cool, though. How's SCHD working out for Tim? Eduardo, this is why I like the pies in M1. Got the percent set where I want them, and money goes to where it is needed. Balances out of with fluctuations without me thinking about it. Nice. Downside is not being able to toss a price. Is not an important position for me. I'm retired, so not buying it for the future. Yoshi got 15 SCHD. Let's go, man. Wow, nice. Let me just do this. I think I had you here, no, Yoshi? I don't remember. Maybe I don't. I thought I did. Thought I did, but I can add you in here. Yoshi. Um. Let me just put you right here. 15 shares. Let's go, man. I wanted to start a position so I could chat with everyone about it. Nice. LOL, fair enough. Yeah, Tim doesn't need it really. He's already set. If I was in my 20s, I'd be buying every share I could afford. Yep. I think in the 20s, and I know that it gets a lot of heat. Because it's not a growth ETF and you could grow your money a lot more if you put it in something like VGT, SMH, or something like that. But I think in a well balanced portfolio, it can definitely work out very well holding it from your 20s and building it little by little from your 20s into your 50s, 60s. You know what I mean? Like a percentage. You don't need to have, you could do a 3 fund or 3 ETF portfolio, right? Something like a VOO with like a VGT and then an SCHD together with it. Like, I think that's a great portfolio right there to start with. And let's say you're doing like, I don't know, you do like 40% VOO, 40% VGT, and 20% SCHD, like that's I think that's a great portfolio right there. Not financial advice. I never own a Honda or a Toyota, and they're just very reliable. And there's very, very reliable. And there's a used SoFi Invest M1 Finance looks very good. I gotta pump my SoFi bags. Oh, let's go. Calvin, what's going on, Calvin? It only takes a little bit every week or month over the years. You'll be thankful you did. Stay blessed. Yeah, thank you, Calvin. That's what I'm always preaching. I'm always preaching that because you know some people, believe it or not, Calvin, they think that they need to have 15, 20, 30,000, 40,000 just to start investing. I've seen it out there, and people even try to make fun if you say that you bought 40, $20 or something like that of a stock. Like, they think you gotta be like this big trader where you have to buy 500 shares at once or 300 shares or this much or that much. And you'll be surprised how long term you can grow a solid portfolio. RM, would you ever look at a non-dividend paying stock at all, Jay? If so, would you look at QXO? Yeah, I could take a look. I have non-dividend stocks. RM, I have Amazon, I have Netflix, I have iBit, doesn't pay a dividend. SoFi doesn't pay a dividend. You know, don't be surprised if something like Netflix and Amazon pay dividends in 10, 15 years from now. But yeah, we can take a look at that one. QXO, what is this? What is this? This is industrial distribution. Distributes roofing, waterproofing, and complementary building products. This stuff that is needed. Price target is 121% upside from here, $30. Year to date is down 29%. Past year is down 38%. Past 5 years down 82%. Wow. He had paid a dividend before they cut it. Oh. I've seen some red flags already. Revenue is right now at 8.56 billion in the okay, but is this growth sustainable? That would be my concern, Yeah, that I would just look at the business in general. The operating income is negative. The net income is also negative. The revenue has grown a lot, which is a good sign, but then you also see the operating income negative, net income negative. And this just started growing. It's not like it's something that has been growing for a while. So I guess it all depends, gosh, I don't know what my opinion will be on this one. I would just be careful and do like a really, really deep research in it. Yeah. And operating cash flow, 291. Free cash flow is positive, 194. But they do have $3 billion on debt. So they do have a lot of debt. Their margins, look, it's all negative. Also, operating margin is also negative. So yeah, just look into it very, very well. Like if you're looking into investing in this one, might be something like traders. Maybe somebody that trades these kind of stocks. Yeah, I don't know if you're gonna be catching a falling knife. Something you might want to look at, BAH. It's an AI play that is reasonably priced. But it has a great dividend growth rate and a 3.25 at dividend yield, mainly government contracts. Let me see. Booz Allen Hamilton Holding Corporation. Yeah, 3.25% dividend yield. Upside of 15% price target from here in the next 12 months. Year to date is down 14%. Past year is down 37%. Past 5 years is down 19%. IPO was in 2010. Heck, cybersecurity, quantum, space, AI. Um, Let me see the dividend stats real quick. 7.5% dividend growth. Payout ratio is 35%. That looks good. They've grown their dividend 10 years. The dividend growth has been in decline. They used to grow at double-digit percentage. Now it's at 7%. Because the share price going down is the highest in dividend yield it has been at, or near the highest, from what I see right here. The revenue looks like it has been in decline though in the trailing 12 months in this year so far. So that's not a good sign. Being on a decline. Gross profit, yes, also on a decline. Operating income is all over the place, but it's still at $1 billion. Net income at 778 million. Okay, the earnings per share is going down. It's at $6.36. Time and materials. Okay, why is all of this going down though? These are the KPI or revenue by segment. So cost reimbursable. Yeah, so everything is going down. I wonder why. Total debt $4.1 billion. Okay, free cash flow is 1.1 billion. Let me see. Profit margin is only 7%. Operating margin 9%. Okay. It's an AI play that is reasonably priced. Yeah. That's some good dividend growth though. I like it. I think this one is more like looking at the future, you know. And you said that it has mainly government contracts, so that's good. That's a good sign. But is it sustainable? Is it gonna continue? All right, let me catch up there in the chat. Oh my gosh, there's a lot of comments. I gotta catch up. RM. Also, Honda for the win. I have a 2014 Accord with 96k miles on it. Minutes, BAT ABS module. It's been a very reliable minus BAT ABS module. It's been very reliable car. Nice, man. That's good. I have a 2013 Civic with 77k kilometers, which is about 50k miles. Wow, that's still brand new, Tim. That to me is brand new still, man. 50k miles? That's it? That's brand new. I own MKC. I am going to build it up. Nice. Same, my friend. They just acquired Unilever too. I think they're going to be a nice gem in a few years. 50k miles? What's your secret? That's awesome, dude. Yeah. Acquire Unilever. Yeah. So that's why. Hold on. So when we take a look, that's why they have so much debt. And that's why the debt went up. I'm guessing, I'm assuming. How much did they spend to get Unilever? Dang, Tim, that is less miles that I put on my vet in the 5 years I owned it. I bought a used car after shopping for 6 months, about a year ago. Caught a gem while looking. I put 3k miles on it in 12 months. Wow. Tim barely drives. But Unilever, you say? Yes, sir. I shop for gently used items. LOL. I had 20k miles when I bought it. I put 60k on it. Wow. I put 1k miles on my car driving in the snow for fun this past winter. I'm Canadian. Did some fast maneuvers in the snow. I get to do off-road stuff on the road in the winter. Actually drove my vet in the snow one day. Snow donuts in a rear wheel are so much fun. MCK had a one-time tariff refund. Gross margin expanded by 270 basis points on last quarter without the tariff refund. Gross margin still expanded 130 basis points. 6% organic EPS growth. Not bad. Yeah. Yeah, I liked it from the so far. I like McCormick so far from the picks from today. And I got to take a look at futures, and the stocks. Yes, I learned to drive on snow in a Mazda 929 rear wheel drive. No power steering, no power brakes. Could slide that around. I agree. Still strong growth. Yeah. Let's go. Thank you for that information to Gengar. Yeah, man. Gengar came in clutch on that. My first car was an 89 Mustang. Nice. Granted, no worse than snow dry. BKC thumbs up. Guys, don't forget to hit the thumbs up. I totally forgot about that. I don't know how many of you guys are here, but there's 30 of you guys here. Don't forget to hit the thumbs up. We're going to continue to take a look at stocks, man. This chat is full today. Oh my gosh. Sundays, I need like 4 hours of stream, man. Fast Eddie, my first car was a 1971 Cadillac sedan. Man, Cadillacs drive nice. I was just on my second job. There was this guy, that just got a brand new Cadillac Escalade. Oh, that thing is, and it's like the fully loaded one, man. That thing is amazing, man. That thing, I don't know. I think it costs like 130, probably 150K. But man, it is a very, very nice truck, man, if you have the money, man. Rain was an issue to throttle your first gear in this condition. Iron is down bad. Let me see. IREN. We're gonna take a look at that. Iron limited. Yeah, I know. I've seen it a lot. Let me see. It's down 1.85% year to date. Oh, it's down 32% in the past month. That's why. Go up 95% in the past year. Upside of 118% from here, $81. Let me see this one. The company owns and operates computing hardware as well as electrical infrastructure. Why is this in the financial sector? M. If it looks like it's a computing company. Let me see. Yeah, the revenue is growing. It's a 757 million. It's a company that is still in the growing stages, right? Gross profit 517 million. Operating income is still negative significantly. Net income is positive 158. Oh, this is a Bitcoin mining. Yeah. That's why. That's why it's down. Has a lot of debt. Yeah. I'm still holding my Bitcoin though. I'm still holding, long term. Let's just wait a little bit more. Indeed, that 929 waited nothing. Too bad as our Datsun pickup, man. Datsun is that was last. I own a 1995 Cadillac Fleetwood as my weekend car a long time ago. 100 spoke wired wheels. Wow. No, I just want to gamble and hope that it goes to 1530. Wow, X. That was, I forgot which stock it was, but that green stock. Tim, let's go. I would have hated to clean those smoke wheels. Spoke. Tim, didn't that Cadillac had that 4300 motor in it? I will always support you and your channel. I appreciate you and our conversations. Nice. That model had the first ever fuel injected. There was a name for that engine. Crossfire, no. LT1 motorcycle, yes. I do 30%. Let me see, 30% VGT, 15% SCHD and SPMO, not counting retirement, which is all VOO or the index fund equivalent. Nice, man. That's a nice portfolio right there, man. You got a nice portfolio. Fast Eddie, that car had crazy acceleration with the 14-inch rims and the exhaust put on it. I only took a chance on QXO because of Brad Jacobs. Thankfully, it's a small amount. It's a lottery ticket. Yeah, I would just be careful, you know what I mean? Maybe It looks like it's gonna be it's a speculative stock, you know, so it's a risky stock. So yeah. Yeah. But yeah, probably it will probably work out. Flowmaster exhaust. And Brad Jacobs looks like a guy that if you give him some money, he will come back with more money. UXO is the number one holding in my hindsight, 50-50. I believe they will reach 50 billion revenue in the future. That's good. I have never changed an exhaust or any vehicle I ever owned. You need to learn about the CEO of QXO. Oh, yeah, that's a good point. Um, I worked with a guy that whatever he bought, he always changed the exhaust. When I saw he was involved and worked with WM and United Rentals, I was sold. Those are two solid companies. United Rentals is a good company as well. Flowmaster exhaust was $500 cheaper than stock at the time. My bet, a two-stage exhaust, nice. All right, he's founded multiple billion-dollar companies. Yep. Also, maybe that's a very good sign. What you guys are talking right there about QXO. You know about this one. Um, he has a book, How to Make a Few $1 billion. Wow, and how to make a few more $1 billion. Wow, wow. I'm going to have to give that a read. Thank you. And your assumption seems spot on, Brad. If you give him money, he'll double it, if not triple it. Nice. I have to ask, is anyone in the chat buying into it on the $300? That's a good question. I'm gonna get off it, but I think he's currently the best businessman in the country. Nice. My favorite car of all time was a 2000 Acura Integra. That car could accelerate to the top and hug corners like no other car. Nice. Acuras are really nice, man. I could be wrong, but I think they're bought Unilever for 16 billion. Ooh, nice. Dímelo J, what's going on, Danny? Sunday, guys. We buy stocks tomorrow. Yes, we do, man. Yes, we do. Oh wow, I caught up to the chat. Melissa, first car I bought was a 87 Ford Thunderbird with a 302. Nice, Melissa. And didn't you, Melissa, doesn't your husband work on cars too as well? I think you mentioned that before a while ago. Cause they used to sling Bitcoin, but they didn't get the old birds bounce. Oh, got it. Nice, Melissa. I always like that Gen Thunderbirds. You talking about Bitcoin? Any thoughts on in holding physical gold and silver, Jay? I don't hold that right now. Um, I don't think I haven't really done any research on gold and silver. I just know that they are, you know, people have bought and held gold and silver long term, and have made some positive returns. But it's not something that I'm right now. Let's just say I'm not interested yet in buying any gold or silver. I don't know, and I might be wrong. But yeah, it's not in my list right now. I don't know. And I might be wrong, but I'm also in the growing stages still. Like I'm still growing my portfolio, you know. Nvidia has call options on IREN at $70. Ooh, nice. Thank you. Second, Thomas. I'm gonna release this week portfolio review after this. Nice, man. Nice. I will catch up on your videos and put a thumbs up. I'm running behind, but not for long. Yeah. I gotta also go watch M's videos. Life is fast. LOL. Yeah, man. This week, honestly, it was just very, very busy, man, for me. All right, let's take a look at futures real quick. And guys, don't forget to hit the thumbs up. Anybody that is just joining the chat, and let me know if there's any stocks that you guys want to take a look at in there in stock analysis real quick. But I just got up to the chat, so let me take a look. And it looks like NASDAQ is up 1.22%. So yeah, still bullish. Futures is still bullish. The S&P, let me see, is also looking green. 0.65%. Wow. Dow futures is up 0.48%. So yeah, you might see SCHD, going to all-time highs once again. Let me see. The overnight hours is still, yeah, there's nothing. There's no movement there in SCHD just yet. I think it will just happen tomorrow, or possibly in the morning pre-market. Let me take a look at Meta real quick. One of the stocks that I hold for this week. It is slightly up 0.78% from what I see right here. Then let's take a look at Amazon. Another one that it is announcing earnings this week. It's actually up 1%. So not much movement, actually. Not much. It's at $234. Then you have GOOGL, which is Alphabet. Futures looking green as of now. Looking to add some cybersecurity this week. Nice, Danny. Nice move. Any specific pick? Let me see. So yeah, Alphabet is still only up 0.6%, so not much in the overnight hours. So not much movement on that one. Let me take a look at Netflix. I'm gonna take a look at a couple of my positions and see where they are at. It looks like Netflix has been recovering the past couple of days. Up almost 2%. It's up almost 0.25% in the overnight hours. So was that the bottom? Was the $68, $67 that shared the bottom for Netflix? Possibly. Possibly. I liked it. I thought it was at a very good multiples, a very good multiples. It was like at a 21 trailing PE and like at a 18 forward PE, somewhere around there. So I think the multiples were very interesting. Can you take a look at Microsoft and GLW? They report next week. Yes, Looney. We're going to take a look at those. Let me take a look at those in share prices right here. Microsoft is actually up 0.5% in the overnight hours. And let me see. GLW, what is that? Corning Incorporated. I don't think I ever looked at this one, so I'm kind of interested to looking at this one. Set to report Q2 earnings report. Okay. Yeah, Corning Incorporated. Let me leave your comment right there. Let me see what else was it. I wanted to take a look at Visa. Visa is announcing earnings this week as well. It is at $355. In the past month, it's up 7%. Year to date, Visa was down with many other companies in the financial sector. That was including American Express, MasterCard. And you can see this nice pullback right here, which I bought. I was buying this pullback right here on Visa. In the low 300s, 200s. I should have bought a little bit heavier, but I bought what I could, and I think I'm okay. I'm happy with my Visa purchases. Then American Express, which announced earnings last week on Friday, it was down 4%, and then now on Friday, and now it's up 0.3%. So American Express, ticker symbol AXP. Yeah, it's reported strong Q2 earnings with a 10% increase in revenue, but saw a 4.3% drop in stock price due to missed revenue expectations. I'm guessing they wanted more. Analysts suggest the stock may be undervalued by 13% based on fresh earnings results. Look at the PE ratio, it's at a 19. Let me take a quick look right here. American Express is another one. Together with Visa, if I could own, I will probably own American Express, honestly. Not financial advice, but I think, look at the revenue growth. Steadily, 10% is actually accelerating. Went from 2% to 8%. Yeah, consumerism is still strong. I don't know, maybe a lot of people know that they're getting in debt, but they're still spending. They're still spending. And remember, really, the higher spenders or the higher earners are the ones that use American Express mostly, right? You got to have a certain credit score, if I'm not mistaken. to get that. But look at this dividend growth, man. 16.5%. Payout ratio is only 21%. Yeah. This is a solid dividend grower, let me see the share price. Year to date is still down 11%. In the past year, it's only up 5%. Past 5 years is up 88%. Look at this pullback, how small it looks right here. 19 PE ratio. Let me look at the ratios right here real quick. If we take a look at the PE ratio, actually, it was at a lower PE ratio in 2022 at a 15. Right now, it's at a 19, so it's on the way there. Also, the forward PE is at a 17. But I think this one in the financial sector is more of a price to book, even though the trade's expensive. 6.4 because they do issue credit out there. So American Express price target 15% upside from here. Yeah. You know, I like American Express long term. Not financial advice. Just remember that, guys. And don't forget to hit the thumbs up. Let me see which other ticker symbols. Let me take a look at Micron Technology. Up 2% in the overnight hours. Wow. Anybody shorting this company in Micron? Nvidia. Let me take a look at Nvidia real quick. It's actually up 1% in the overnight hours. Yeah, it's at $208 right there. What is another one? AMD, Advanced Micro Devices, is up 2% in the day, in the overnight hours. Still up 143% in the year to date. Wow. Let me see. All right, there's a lot of comments here. All right, let me take a look at. You wanted to take a look at Microsoft like itself, right? They are announcing earnings on Wednesday. On Wednesday, I definitely gotta do a live stream on Wednesday because you got Meta. So I'm guessing we're gonna go through the earnings reports of Meta and Microsoft. Oh, and SoFi. Procter and Gamble, I'll do it on Saturday myself. I'll go through that. And then you got Visa on Tuesday. So we'll probably also do a live stream on Tuesday. So I think I might take tomorrow off on live streams, do a video, and then I'll do live streams on Tuesday and on Wednesday because I want to take a look at Visa's earnings report. We can also do waste management. I will do two. And then for Wednesday, though, I do have a busy one, which will be Meta, Microsoft, and SoFi. Those will be the three that I will do on there. Then on Thursday, we have Amazon. Wow. busy week. So I think Microsoft, Looney, it's, we could go through it very quickly, honestly. Price target, $556, upside of 45% from here. Microsoft is still down 21% in the year to date, 25%, 24.5% in the past year, still up 31% in the past 5 years. Microsoft is already embedded, it's embedded into companies in the US, all over the world, like their products is in there already. Like, I don't think there's companies are going to switch from Microsoft to something else. Dividend growth, 9.6%. Payout ratio, 21%. They have grown their dividend 20 years, so dividend still safe, growing nicely. It's only less than 1% dividend, so dividend yield. It's not really for that, or unless you're in your 20s or something like that, I guess, but that's a very small dividend. Look at the revenue growth. Solid revenue growth, 17, 18, 14%, 15%. Operating income, yeah, something you like to see. Net income, of course, guys, don't forget, this is not financial advice. I'm just sharing my opinion. We're just taking a look at this real quick. You still gotta do your research in it, but this is just what I'm liking over the top, of each one. Earnings per share is at $16.80. Also, great growth right there. Yeah. The revenue by segment, they're all growing. In cloud is growing, more personal computer. That's the only one that is kind of flat. Yeah, it's kind of flat. the personal computing one, but most of the revenue come from companies. So to look at the total debt, it is $56 billion in total debt. But look at the cash flow, $72 billion. Like they can pay off the debt. I don't think I need to look at anything else. I know investors are nervous about the future, but I don't know if you guys use any of their products. Look at the PE ratio. Trailing PE is at a 22. In the past 5 years, this is the lowest. Forward PE at a 20. Price to free cash flow 38. Price to sales ratios at 8.9 also as well. I'm guessing, it's a scare about AI, disrupting Microsoft, and LLMs are gonna be able to create programs like Microsoft. I'm assuming, right? What companies are gonna go ahead and move all their, you know, files and everything from all the Microsoft products, like Excel, Outlook, and all of those Teams also, which you also meet in Teams. Like, they got good security also. Do you think a lot of companies are gonna start going away from it? And I don't think so. I really don't think so. I think Microsoft, I like it long term, not financial advice. Let's take a look at GLW. And I have posted about it. I think under $400 is still a good stock. But that's just my opinion, not financial advice. Let me see, what is this? Corning Incorporated. Corning. Electronic Components Technology. Okay. Fibers, cables, hardware, and equipment products such as cable assemblies, fiber optic hardware. Okay, so it's like a hardware company for computing. And yeah. Okay, trailing P is at a 74, P at a 43, so it still looks a little bit pricey. 0.76% dividend yield. Upside of 45% in share price from here. Year to date is still up 67%. Why the pullback so much? It's down 24% the past month, but why? What caused that pullback in share price? Is it something significant? Did they lose any contracts? Looney, I would just, take a look at those. Did they lose any contracts or anything like that? Is there anything in their future guidance that it just looks uncertain as of right now? I would just take a look at that. I know it has been running up a lot. So let me see the dividend. Yeah, payout ratio is 53%. They haven't grown their dividend. They only paid 28 cents per share for the past couple of years. Okay. Take a look at the financials real quick. See if this works. Okay. Let me see. So they are growing their revenue in the past couple of years. Right now, 16.3 billion. So yeah. Yeah, accelerating revenue growth. 4.2%, then 19%, then now 20% in the trailing 12 months. Will that continue? That will be my only question. Will that continue? Will the demand is still there? Is that a company that the demand will continue long term and it will not go to a different company? Or what is their competition? Like, is there another top company that it's their competitor and it's taking significant market share or anything like that? Or it looks like, look at this gross profit, also 5.9 billion. Operating income is also growing, 2.47 billion. Is this sustainable? Like, is it gonna continue, the demand? That would be my only question. Earnings per share growth 300%. Wow. Let me see. Optical communications. I like this revenue by segment right here. Honestly, I'm liking it a lot because it shows me what segments do the company profits from. What are the products? Where do they go? So optical communications, 6.7 billion. And it looks like for automotive, is even though it is going down though. But they do have the automotive segment also as well, which I would think, depending on what who are their customers, right? Um, with electric cars coming up in the future, this probably might go up. This should boost the revenue, should boost in the future. I will assume, right? Revenue total, yeah, it's growing, so that's what I would think. Let me see. So they got $8.9 billion in total debt. Free cash flow is only $1.5 billion. Okay, so they still have a lot to earn. So they still have a lot. All right, let me see. The profit margin is at 12% and is accelerating from 4%. So operating margin is also positive, 15%. I think these pullbacks right here is just because of future guidance. Earnings date is next week. Oh man, what to expect, right? It can bring in some more accelerating growth in revenue, earnings per share, or is it going to slow down? I think that's what is going to have investors pull back. That's my only concern with some of these companies, because a lot of them have run up so much in share price that we need to look based on the demand that they have, each company, and the revenue that they're generating, the products that they're selling. What are they going to stay consistently selling over time? Because unless you're planning on just swing trade it, right? For now, but I'm thinking more future, right? 4, 5, 7 years from now, what does that demand look like? Is this a company that is gonna stay strong over time, or is it a company that is just getting pumped right now? They're just selling right now, and then in a year, when demand slows down in a year or two, like the way they're forecasting also memory stocks, that it might slow down in like a year or two, will it fall? And then you're left with like holding the bag with the company. You bought it at $150 a share or something like that, and it just goes back down to like original prices in the 20s, 30s, 40s. What is the future of this company? That will be my question, my big question with it. All right, let me see. I'm sorry to keep asking for you to look at stocks, Jay, but would you mind looking at Intuit and maybe Microsoft? So we just took a look at Microsoft. Sorry, Looney, beat me to asking about Microsoft. No problem. We can take a look at Intuit. Looking to do a similar fund to the Chat GPT. Oh, that's pretty cool. You did make some money though on the other one. Or did you sell everything? I thought you sold everything with PANW, CrowdStrike, Fortinet, and Net. Cybersecurity. I like cybersecurity long term, Danny. Honestly. And I think CrowdStrike, which ones are the top two companies? I think it's CrowdStrike. And is it Fortinet or is it Palo Alto Networks? Or which one is it? This Cloudflare. Let me leave Intuit right here so we can take a look at in a second. And guys, don't forget to hit the thumbs up. Very, very important. But yeah, I like cybersecurity long term, honestly. Amazon, Meta, and Microsoft has underperformed VO over the last 5 years. That can't keep up, can it? Yeah. I don't know, man. Yeah. I'm not investing in Microsoft. I kind of don't want to hold this stock. I'm okay with it on SCHD, honestly. Whatever I hold on SCHG and VOO on it, I still think it's a solid company. Has a strong balance sheet. Has a lot of cash flow. They're investing. It's not a company that is gonna, go away anytime soon. Honestly, I think I still think long term Microsoft is a good choice. Or a good company. Not financial advice, of course, but yeah. Amazon and Meta, wait till the capex spend start bringing some return on investment. Microsoft earnings will move the market up or down. I don't know. Yeah. Well, the market is mostly semiconductors right now. Like if you see VOO, hold on, let me go back into this right here. If you see, most of it is tech, so and let me see, hold on. Microsoft, it is tech, but you got Nvidia, you got Micron, like there's a lot of semiconductor, AMD also. Well, yeah, I can say Broadcom. Yeah. Microsoft is 4% of the S&P. So yeah, it can significantly move uh the market. Let me see. About 15 shares of Google the day after earnings and looking to do the same with Amazon this week. Wow. Wow. Strong buy, Danny. Let's go, man. I like Google long term. You know, I wouldn't, I think Google long term, Alphabet, once that capex spend right starts slowing down because they built much more, or what they needed, for there, and then that capex, all those data centers and everything that they built starts bringing some ROI. That's when it's gonna be, great for the stock. Will it be in next month, this year, later this year? I don't think so. I think Google is going to be more of a long term play, 5 years from now or so, maybe even longer. But, I'm okay with it. And I think, Ian, I don't know if you guys know Ian, he has a channel also. It has many, many more subscribers than I do. And I think you guys, I'm pretty sure you guys have watched his channel. He mentioned to me that he believes, yeah, I think it was Google that we were talking about, will be a good dividend grower long term, that he believes. And I think so as well. I think Google long term, you know, Meta possibly as well should be some good dividend growers long term, But is it going to be 1, 2, 3 years? I don't think so. It's going to take time. But once it gets there, we'll be um, you know, dancing. Google is a great buy right now, in my opinion. Yeah, I'm gonna start DCAing into it. You know, with Google, let's say you have a cost basis around 180 on both GOOG and GOOGL. Will it still be a buy over $300? I tried to take 5, 10, and 15% of the 52-week low, and it's nowhere near that. Yeah, so with me, RM, one thing that I had to learn is not to anchor to share prices. Just go by your investing strategy. You know what I mean? And it looks like you invest based on the 52-week low, right? 10, 15% or anything like that. I like to take a look at the financials, take a look at the PE ratio, price to book, price to sales, all that, and then make decisions based on that. But also, I'm a different investor that probably a lot of you guys, right? I'm still in the growing stages. I'm still putting like a little bit of money into compared to other people, right? Other people, they put $1,000, $1,500 into a stock, much larger amounts, 10,000, 15,000, 20,000. I think that's much more different than I do. So I'm just, when I see opportunities in pullbacks, I see lower valuation, lower multiples on the stock. That's when I will start DCAing into it slowly. But it's because I only purchase small amounts, But do I believe Google long term the share price would be much higher from where it's at right now? I believe so, right? But I still gotta use caution. I also don't want to just go ahead and throw money at Google every week just because, I still want to keep track of the company, in the long term, but still making DCA purchases, dollar cost averaging. I think that's always a good solid way, and it also worked for Meta. I was able to DCA into it and lower my costs, and it's good strategy. AXP is my pick for USA credit cards. Best CAGR of the three. Yes. Yeah, American Express is solid. The market looks like it wants to bounce. Of course, pre-market and after hours are rumors and lies only. LOL. Yeah. GLW Corning make fiber optic cables and Gorilla Glass for phone cases. They have a huge partnership with Nvidia. That's good, Loney. That's some good info right there. Wednesday has Vici earnings too. Oh, I didn't take a look at that. How come I missed it? Oh my god, I missed Vici Properties. Tim, thank you so much, man. I literally, Tim, being 100% honest, I missed it. I missed Vici Properties. I looked at Coca-Cola, I looked at Visa. So if I and I was looking at this yesterday, Saturday. I looked at Meta, Microsoft, Amazon. I think I just jumped into Amazon. I didn't even take a look down here. But yeah, Vici Properties does announce earnings on Wednesday after hours. So that's another one I gotta take a look at. Oh my god, I cannot believe I missed it. I cannot believe that. Thank you so much, Tim. Finger crossed with their evaluation. I need money. Nice. Anything above a 3% increase will be a win. AI is disrupting MS, but not in the way people think. Yes, Microsoft. Okay, thanks. Give us some information on that. MS or M money is Microsoft outside of stock word. The fuss world. Sorry, got to run. Bye, Jay, and everyone. Have a good week of investing. Thank you, JL. Enjoy your week also as well. See you. See you. FOSS. Free open source software, I think. Okay, thank you. We may get memory from China if we approve and then they approve. Yeah. Yeah, I think you know um that's what I heard too as well, and I don't know if it was in CNBC, Bloomberg, and also on X. Also, I've heard the same thing. 1 to 2 years, and then uh, they keep on talking about memories cyclical. So, Palo Alto Network, yeah, with CrowdStrike, yeah, both of those. You know, I don't need memory. I need compute. Our cloud data center is almost out. Oh wow, you guys gotta invest more. Anyone own an electric bike? What brand and what do you think of it? That's a good question. I don't. I don't own one. Fortinet, the stock has run. Long term, the threat footprint is so expanded and expanding. Cybersecurity will be very important. Yeah, I think the same thing. I should probably add a cybersecurity stock to my portfolio. That should be one of the ones that I should add to my portfolio. I agree, considering adding bug. But if I do, I will either do CrowdStrike or Palo Alto Networks. Honestly, CRWD and PANW, but they are both different. Is broad hardware software and CrowdStrike is cloud software. Got it. Okay. All right. Yeah. Those are the cybersecurities. The top two, I believe they are. I may do the same. I don't trust any company or the investors really enough to pick a stock. I want a Stark Varg dirt bike. I'm gonna have to look that up, Looney. Nice. I work with 8 of the top 10 companies in bug. Google put up a 10% dividend raise last fall. That should keep going for a few years. Yeah. I think long term, we're gonna see some solid, and I know one of the things that also the stock based compensation also, it could be a little bit, um worrisome, I guess, but they're also buying back shares, even though they stop in this last earnings. But I believe that they'll continue buying back shares, so that stock based compensation should go down in the future. So let's see. Great advice, Jay. Thank you. You're welcome. I have set up integrations with most of them. Used to work for an MSSP too. Maybe it's just me, but I hate seeing my cost basis go up. Of from RM. Yeah, but it all depends. I think it's mostly, I used to hate it at first as well, RM. I guess it all depends on what's the size of the position, right? If you have a meaningful size and you're not planning on buying anymore, then, you're okay, right? You know what I mean? With me, I don't want to anchor because I'm still in the growing stages. So I want to continue growing my positions, and I know that it will bring up my costs. Like I brought up my cost on Main Street Capital, I brought up my cost on Visa, Amazon. I'm gonna start doing that with Google now. My cost per share is like in the 160s, but I like Google long term. It's getting to a lower and lower multiple than to where I want it. I want it at a lower multiple. I want it as close to 20 times trailing PE as possible. That's really what I want on Google in share price. So I really want it under $30. Right now, the way I also see, which is something that helps me by buying small amounts, like $10, $5, $15, I see it like if it's a dividend reinvested back into it, into the stock. Anders, not just you. Yeah, appreciate that, Anders. Hey, what's going on, KC? Let's go. Hey, KC. Going to Boracay tomorrow for 4 days. Nice, man. Keep enjoying your vacation, man. Awesome, man. Enjoy your vacation. Price anchor is rare. Nvidia is an example. It's cheap based on earnings. The valuation is fair, but the $200 tag looks expensive compared to $100. But you failing to realize that the valuation has changed. Yeah, Gengar. You hit it in the nail. Remember that if the company continues to grow its fundamentals, right, or its financials, the share price will grow with it. Like it's not gonna be, there might be some negative sentiment that will not make sense, that will bring the share price down, right? But it's most likely if the company is continuing to grow strongly, the share price will follow. It's not gonna stay the same share price as it was. So you just gotta find, and that's why you gotta keep doing your research over time. You gotta find spots where you can, grow your position some more if you believe in the company long term. And like pullbacks, okay, this pullback right here, very good. Company still strong, revenue grow, earnings per share grow. They're paying off debt, free cash flow is growing. Any metrics that you are looking into the stock. And if it's still strong and the share price has a nice pullback to where it brings it to some nice valuations, then it's good time to DCA into it, right? But if you already have a solid position where, your position is like 30, 40, 50 grand or something like that, where, you are set, and you're like, oh no, yeah, I'm good. Like I don't want to invest in it anymore, right? Then you're good. But if you still believe in it and you want to continue growing your position, anchoring to the share price, yeah, it could be a very a negative, for you in the long term as well, because you could have added more shares in the future. And then remember, maybe Alphabet will have a share split, forward share split in the future. You never know, right? Like Nvidia did, like Netflix did. Which ones are some other company? SCHD also did a share split. I believe SCHD will probably do another share split in like 12, 15 years from now. So I'm piling up shares right now. I was buying SCHD in 2022 at 70 something dollars a share. And then look at it now, it's in the 30s, and I was able to accumulate some shares. Those tripled. So I went from having, I think it was less than 100 shares to having a couple hundred shares. Like that's good also as well. But yeah, it's just there's so many things, that go on with investing. So yeah, nice, KC. My money didn't transfer in time to buy anything on Friday. Actually, still waiting for it. Oh man, hurts my soul to see my cost basis go up on stocks. I don't dollar cost average regularly, even if I believe it's a great time to buy a stock. Yeah, Looney. I think everybody does. Everybody, wants to see the, like for example, I was up 140% in Alphabet in my Google position, and now I'm up under 100%. But it is my time to start DCAing into it slowly. And then if it goes under $300 a share, I would love to buy it very heavy. RM Gengar Preach. I'm running into that issue with Google, Cat, Amazon, and UNH right now. I'm learning to DCA small amounts regardless of the price, though. Nice. Have a great vacation. You need a good one. Talk to you soon, my friend. Yep. To KC. Take UNH for me. I'm at $276 cost basis, and it kills me to see that go up even a dollar. Yeah, but also, if you see that it is a little bit pricey, it's also okay to hold on and look for something else in your portfolio that it looks more attractive or a lower valuation. Thanks. We'll message you on IG today. I should probably do a Instagram account, but you know, I don't know. Is price anchor the investment psychology term for not wanting to raise your cost basis? Yes. Yes. Yeah. That's yeah, anchoring to the share price or price anchor. Yes. Cost basis is kind of a vanity metric. Yeah. Very good way of putting it, M, but a strong one. Or it can become one if folks anchor to it. My Nvidia cost base is around 130, but it looks more a buy than when I bought in. Nice. I'm trying to change on priding myself on cost basis. I guess it's just getting over the psychological hump. Yeah, it takes time, RM. So, because it happened to me. It happened to me many times. I should have never anchored to share prices in some of my positions. Um, but yeah, it does happen to I think to everyone. I've got to tap out here. Good night, everyone. Hope everyone has a great investing week. Have a good night, Tim. See you around, man. Thank you for stopping by. Tim, let's go. RM. Speaking on share splits, what are a few things to look for to indicate a split? I'm banking on Cat hopefully doing one soon, but I have no idea what to look for. LOL. Honestly, I never looked into that myself, RM. Um, that just depends on the company itself. I never really looked at that into that to see what is it that pushes a share split. I know some will do it for the lower contracts in like options and cover calls and all that because it will spike more contracts on the stock also as well. But also it will boost the shares of of the executives in the company, like the CEOs and whoever that founded will give them even more shares for the future. But I really don't know what triggers a stock to do a share split. Honestly, I've only seen like the news where they announce it and they're like, "Yeah, we're gonna do a share split." I think it just gets decided on an earnings report or a meeting that they have. But yeah, that's it gets decided within the company pretty much. Looney, good luck with your stocks this coming week, Tim. Night. Thank you. Peace out, bro. Till the next time. If cost basis is an issue, just open a new portfolio. That's a good idea. I know it sounds extra, but it helps a lot. Well, I guess everyone is different, but I am around double digits. Nice. Nice. You have double digit stock portfolios? That's a good question. But yeah, let me see. Oh, we were gonna take a look at Intuit. I almost forgot. Almost forgot, RM. All right, so Intuit right here is at $296 a share as of Friday. PE ratios at 18, forward PE at 11. This one, yeah, is down year to date because this one is in the software, right? Software application. So this one, consumer Credit Karma, Pro Tax. This is where the one that you use to do your taxes. They have that software. So this is another one that what investors are worried about is that AI LLMs are going to be able to do your taxes. So that's gonna be a significant loss to them. As of right now, because of their financials, the way they're growing, price target is a 56% upside from here, which is $462. Dividend 1.62%. Um, yeah, in the past year is down 61%. Yeah, this major pullback in the past year is because of that. It's because of AI. Uh, do you believe it will disrupt this company? That will be the big question. You know, the revenue, you see it growing every year. It's a $20.9 billion revenue growth. You can see it's growing double-digit percentage. Very solid growth right here. Operating income, yeah, also growing 5.7 billion. Net income also growing. Like it's just, earnings per share also growing. Is really, really the future. That's really what it is, the uncertainty in the future. Will AI LLMs disrupt these companies? QuickBooks, look at this, 4.84 billion. Online services also growing. You see, like everything, desktop and services slightly growing. It went down in 2024, but it's still growing. Consumer service growing. Consumer product, this one is slightly down, but it's not much. Their main segments are making money, like they're growing. Pro tax service also growing. Pro tax product also growing. So let me see. Total debt is $6.82 billion, and free cash flow is $7.7 billion. So they got more cash than debt, so they can pay it off easy. And look at these margins, man. 21% profit margin, operating margin 27%. So yeah, have very good margins also as well. It looks good. It looks good. It's just the uncertainty in the future. Um, you can see payout ratio 29% in the dividend, so very safe. Dividend growth 15%, so very nice CAGR. Look at this, 14%, 15%, yeah, double digit percentage. The dividend yield right now is like near the highest, almost 2%. So it looks really good. What the concern is the future. What do you believe in the future, with it? Will this company get disrupted by AI, in your opinion? Let me see. As in the number of portfolios, I have VG at $7.33 in one portfolio, but I needed to keep buying, so I bought it in a new portfolio. I show 6 portfolios in my videos. The 7 will be assets up. Happy to report I dripped my 3 NEOS positions last Friday. Let's go, man. Let's go, KC. Woo, mine going in for QQQI in the morning. Nice. Buying even more QQQI, more of those funds. I'm a small business owner who understand LLMs, AI. I'm still using QuickBooks. Let's go, KC. My accountant uses QuickBooks also as well. Bug added to my VTI Robo portfolio DCA time. Nice. Music. Please don't mind me asking, but with QuickBooks, do you see yourself resubscribing to QuickBooks if you use it and like it? I'd assume other small businesses feel the same way. It has been growing. Financials look good. RM. Financials look good. From what I'm seeing here, PE ratio, I didn't even take a look at that, but positive. Yeah, it's like the lowest in the past 5 years as well. Also, the trailing PE is also the lowest. That is the uncertainty in it. So, do you believe Intuit will continue? Will it get disrupted by LLMs? M is M uses it. The numbers still show the growth. I don't know. Jay, can you take a look at GRMN? They have earnings next week. Oh, Garmin. Isn't this one the GPS one? Yeah, GPS enabled products, navigation, communication, sensor base, and information products. The only thing with this one, the Garmin, it has bands, GPSs. When you said this company, I only thought about the GPS and that's it. That's all I thought about. They also have watches, so that competes with Apple watches. The only thing here, you see, like these watches, isn't this like the same thing as an Apple Watch pretty much? Yeah, this GPS is right here, the Garmin, do you really need it anymore? Like Google, you could put Google Maps in your phone. Right? The website looks really good, but I don't know. But I might be wrong. Might be wrong. Let's take a quick look. PE ratios at a 27, forward PE at 25, dividend yield 1.73%. Nice. Upside in share price of 7% forecasted for the next 12 months. Year to date is up 19%. Past year is up only 4%. Past 5 years is up 57%. Let me take a look at the dividends. Oh, wow. Great dividend growth. 18%. CAGR. 43% payout ratio. So that still looks solid. Nice. Very nice CAGR though. Let me see. Financials. The revenue is growing. Okay. Nice pace though. Look at this. Double digit percentage, 15 and 20%. Gross profit 4.4 billion. Operating income 1.9 billion. Net income also 1.7 billion. Oh, this company is growing very well. Earnings per share 8.9 billion. Let me see. Fitness is growing their business. Outdoor stagnant, kind of flat. Aviation. Oh, okay. But now this is a different story, you see? Like aviation, yeah. They have that segment also as well. And marine. I think these two are no-brainers, right? This is definitely needed all the time. The fitness, I'm kind of surprised that it's growing that much, with all the competition that they have. And then auto OEM, 665 million. Would this continue growing? I don't see any Garmins like in autos anymore. I don't know where this growth comes from. Let me see the total cash, 167 million. I mean, the total debt and the total cash flow is 897. So they got more cash than debt. So they can pay it off easy. Let me see the profit margin. Ooh, 23%. I like it. Operating margin 26%. Gross margin 59%. Not a company that I will be interested in adding to my portfolio. In the past 5 years, is trading at a 27 PE. So it was good to buy it in 2022 and 2023. Had a nice lower trailing PE, of 19 times. Forward PE is at a 25 also as well. Maybe it would be good to like look for a nice pullback in share price. Like if you see something, because the financials look strong. I don't see anything wrong with it. But with the earnings report coming up, right? I will definitely look at the future guidance, see if the growth it continues. If there's some type of sell off, might be a nice opportunity to buy like off the top of my head, maybe like $200 a share. That would be a great entry point, I think. Um, yeah, I don't think it's fairly valued, but that's just my opinion right there. But looks good. It looks good. Looney. I didn't see, just over the top. I didn't see anything wrong with it. Got cash flow, so nice balance sheet. Everything's growing. It looks like, so if the growth continues and forecast still looks good, why not? Not financial advice. Remember that. And guys, don't forget to hit the thumbs up. Very, very important. I could be swayed on price, but it will have to be a significant cost savings for me to trust my tax history. And I'm probably not putting that to Vibe Coder X. Yeah, that's gonna be the other thing to it. Very good point. Is that for programs like Intuit, like Microsoft, is a company gonna go ahead and switch into an LLM or something like that, where they're not 100% sure, like the security is going to be very, very important, with the information, with any tax information, with any employee information, with anything like that. Like, it's just, social security and things like that. Like, that's no joke, for you to just go ahead and, oh yeah, AI, let me create something and boom, boom, boom. What if something goes wrong with it, and all your information is out there, like that? That's not good. So there's just a lot of things to think about, right? um but yeah, any thoughts on Lowe's or Home Depot, Jay? Lowe's near 52-week low. We're gonna take a look at that one in a second. I think that's gonna be the last one. Yeah, that's gonna be the last one. It's almost 10 o'clock, so I gotta head out. A tax ID or social isn't just something to hand out to any old app. Yes, I agree. Appreciate you. I wouldn't trust AI with my taxes, especially if I owned a business. Another plus to Intuit is that dividends is juicy. Yes. Garmin also does things like fleet management software. Oh, nice. What AMD doing next week? Oh, that's gonna be a very good question. Hopefully, very good. Garmin also makes super high-end avionics for airplanes. Yeah, that is something I didn't think about when coming for Garmin, but it looks good. I would just, keep it on the watch list. See if there's a nice significant pullback. Like, look, you see this pullback right here? I think this pullback was good. You know, Low 200s. What I was just talking about, actually. I was actually just mentioning that share price. And look, low 200s to 180, 190. I think this one was probably a very nice. Let me do the quarterly one. Yeah, it was at a 23 times trailing PE. That one looks, look good. Um, let me see before we go to Lowe's. With only 1 billion worth. Avionics have a large moat due to airplane certifications. Yeah, I think that's a strong, that in C also. Um, Marine also as well. I think that they gotta have a nice large moat on that. You see the growth very well on those two segments right there. And it's not their largest, but you see some nice growth. I am close to opening a position into it. I need another quarter though. Oh, nice. What's up, Jay and fam? Came by to press the thumbs up. Thank you, Thrill. Really appreciate it, man. And thank you for stopping by. May need to see stats after next April 15. Oh, well. Let's take a quick look at Lowe's real quick before I head out. Because that's going to be it for the night. I think we looked at these ones before on previous streams. But I think the demand has slowed down for Lowe's. 2.3% dividend yield, price target $263, so upside of 27% from here. Let me see. Year to date, the share price is down 13.9%. Last year is down 9%. Last 5 years is up 3.3%. A lot of volatility in the share price. It looks like it's good to pick up at the lowest valuation as possible when you pick up any lows. Dividend stats, you can see 41% payout ratio, so looks safe. The dividend growth 4.3%. They have grown their dividend 54 years. So yeah, grow their dividend very low. But there was just a lot of demand. Hold on. During COVID because of the stimulus checks also as well. So if we take a look at the financials, you can see that there was a lot of demand. So it looks like it's back down to the levels where it should be, right? Without all that demand that they had with the stimulus checks, that they were given during COVID, like the $600. And you can see 88.4 billion. It looks like it's just growing revenue. You see single digit percentage. I think it's just back to the levels where it should be. Same thing as Pfizer. I see it as the same as Pfizer. And I think that the demand to fix houses and things like that, I think has slowed down a lot. It's probably also because of that, because so many people fix their houses during that time, and there was such high demand that now you know whatever they fix is still good. It's just gonna take a couple of years for it to need any renovations or anything like that. But yeah, it's slowing down. Everything is slowing down, even net income. Let me see, the operating income slowing down a lot. Yeah, 10.2 billion. Yeah, if you see the revenues, how it's going down. Building products also same as well. I think it's just going down to the levels where it should be at previously. If I had the information from like 2019, 2020, that would be good. Because that would kind of give me an idea of where it was at previously um to COVID, So that would give me a better idea. Total debt, yeah, 42.5 billion, $7.62 billion in free cash flow. Yeah, Lowe's is a company that is still, yeah, a little bit more of a pullback. Yeah, maybe under $200, it will look nice. Under $200 a share, somewhere around there. But yeah, Lowe's and Home Depot, like QXO, are constrained in high rate environments. The rate isn't high, but rate cuts seem off the table in the short to mid term. I'm guessing if rates get cut and people can actually afford to buy homes, they'll go back up. Will that make them cyclical? Good luck, everyone, next week during the big earnings week. I'm going to head out. Great stream, Jay. Thank you. Thank you, Looney. See you, Looney. Yeah, they're slightly cyclical, but with interest rates, I don't think a lot of people want to get into debt right now to fix their home. With interest rates also so high. Yeah, so that does make sense. All right, guys. I think this is gonna be it for me today. Thank you so much, guys. Anybody that didn't hit the thumbs up, don't forget to hit the thumbs up. Very, very important. I'm hoping I was able to. I read all the comments once again. I'm lucky to be able to do that on a weekly basis, right? Which is definitely awesome. But yeah, we were able to go through all the comments, all the questions. I think I researched all the stocks that you guys mentioned in there, hopefully, and remember that my researches are not like, deep dives in it. I'm just doing an over the top because I don't want anybody to take it as financial advice. I'm not a financial advisor. You guys still got to do your own research, which is very, very important before you invest. You shouldn't invest just because you see me or somebody else, investing in it. Always make your own decisions when investing in any assets. That's including real estate or anything like that. And man, let's see what happens. I'm gonna put early in the morning. I'm gonna add my purchase for SCHD tomorrow at opening. As soon as the market opens, I will be buying another share of SCHD. I know it's near all-time highs, right? But I still gotta buy. I still have to buy more and more SCHD. But yeah, guys, don't forget to hit the thumbs up, subscribe to the channel if you're not subscribed. That is very, very important. Um, if I start getting trolls in the chat, I might have to turn it off to where everybody can comment, to like only subscribers can comment. You know, I'm gonna might put it to subscriber only in the future if I start getting like some trolls or anything like that. That's very, very important for you to subscribe to the channel. Um, and yeah, don't forget to watch the video portfolio update. I showed it. I posted a video earlier, so you guys can watch it as well. And yeah, and that's pretty much it. So, guys, like I always say, I hope you enjoyed this one, and I'll see you on the next one. Thank you.